Okay. So, on the behalf of Auditing and Assurance Standard Board of ICAI, I welcome all the participants at today's webinar on SA 500, that is on audit evidence, and SA 501, that is audit evidence on specific consideration for selected items. So these two standards on auditing are immensely important in the audit process. While SA 500 lays down the fundamental principle regarding what constitutes audit evidence, its sufficiency, appropriateness, and the auditor responsibility in designing and performing audit procedure to obtain such audit evidences. And SA 501 provide additional guidance for specific areas such as verification of inventories, confirmation of litigation and claims, and the presentation and disclosure of segment informations. So in today's webinar, we will cover the both standards. And for this, today we have CA Kamal Moore, sir, who will be leading the today's session. So good afternoon, sir.
Good
So
afternoon,
I would
Manish.
like
Good
to introduce CA Kamal Moore, sir. CA Kamal Moore, sir, is an eminent professional and highly respected speaker. And CA Kamal Moore, sir, is distinguished chartered accountant with over 16 years of active practice. He has completed several specialized courses of ICI, and he is also a qualified peer reviewer. He has also earned a PhD degree from Assam Royal Global University, and he has been associated as a faculty with reputed institutions like Guwahati University, Tezpur University, and IIT Guwahati. Besides contributing to ICI in various capacities, including as a past chairman of Guwahati branch of EIRC of ICAI, and currently as a co-opted member of co-opted members of various committees and boards, and also the member of the study group on SA for LLP under the AASB. So now I request CA Kamal Moore sir to start this session. So over to you, sir.
Thank you so much, Mr. Vivek, from the Auditing and Assurance Standard Board. And a very good afternoon to all the participants. At the outset, my gratitude to the Institute of Chartered Accountants of India, especially the Auditing and Assurance Standard Boards, to give me this opportunity to share my views on two very important standards on audit: SA 500 audit evidence and SA 501 specific consideration for special selected items. So, without any further delay, we would start with the session. I believe the presentation, the technical team may kindly confirm the presentation is visible on the screen. Yeah. So friends, as you know, this entire webinar is divided into two different standards. The first is audit evidence, and that is SA 500. And the second being SA 501, which will be on specific consideration for selected items. We'll cover the session in a manner like giving a brief introduction of the standard, the main content, and then we can take up the question answers towards the end of the session. So I'll request the participants, if they have any queries in between, they can just put it in the chat box, and the team from Auditing and Assurance Standard Board will coordinate towards the end of the session for the question and answers. Well, the first standard, that is SA 500, this covers different aspects of audit, like the scope, meaning of evidence, important facts, the procedures applied for obtaining the audit evidence. We'll also talk about the sufficiency and appropriateness of the evidence, the methods, the process for obtaining further audit evidence, the quality of evidence, discussion on reliability of information, inconsistency and doubts with respect to reliability, etc. The standard also discusses about the role of a management expert and how to deal with a situation when certain management experts are involved in the process of audit, right? Friends, this entire standard, SA 500, this is basically a revised version of the erstwhile Auditing and Assurance Standard AAS 5 audit evidence, which was issued by ICAI in the year 1988. And way back in 1988, the original standard was issued. And in 1999, this SA 500 was revised. Of course, the terminology has changed from AAS to SA now. This revised standard is quite detailed in terms of audit evidence. And it also deals with the auditor's responsibility to design and perform audit procedures to obtain sufficient and appropriate audit evidence to be able to draw conclusions on which the auditors base their opinion. This standard deals with the requirements of obtaining the evidence, A, how information is to be used as an evidence, how to select items for testing the audit evidence, and the procedures to be applied in case of there is inconsistency or there is a doubt about the reliability of the evidence. So with this background, we'll start with the main discussion on the standard. One writer here, this standard SA 500 is applicable to all types of audit evidence. So you cannot have a situation where one particular evidence is dealt by SA 500, another evidence is dealt by some other standard. No, SA 500 is applicable to all types of audit evidence. Now, the meaning of the term evidence, right? Audit evidence, as prescribed in the standard, is the information used by the auditor in arriving at the conclusions on which the auditor's opinion is based. Now, the terminology used is the information used by the auditor in arriving at the conclusion. So, during the course of audit, we come across a lot of information at our disposal. Like you may have a bank statement, you may have a bank reconciliation, you may have a purchase bill, you may have a sales bill, you may have a lot of other management assertions coming at your disposal. Evidence may be internal, it may be external, it may be oral, it may be written, in fact. So if we talk about evidence, what could be the components of an evidence? It could be your accounting records, like records of accounting entries, checks, records of electronic fund transfers, your invoices, contracts, general and subsidiary ledgers, journal entries, worksheets, spreadsheets, calculation of deferred tax, calculation of depreciation, cost allocations, any other reconciliation, and also disclosures done by the management in the financial statement. You'll be surprised to know that yes, disclosures done by the management in the financial statements are also a part of audit evidence. Besides this, there are other information which could be a part of audit evidence, like minutes of the meetings of the directors, minutes of the meetings of stakeholders, confirmations from trade receivables, trade payables, manuals containing internal control, etc. So lot of items fall in the gamut of audit evidence. Now, as I mentioned in the beginning, evidence could be of two types primarily. First, depending on the nature, it could be a documentary evidence. Documentary evidence could be like a bank statement, a fixed deposit receipt, etc. It could be a visual evidence. Visual evidence means observing something which we gather on the basis of our observation. For example, if we are present during the physical verification of inventory, that's observing verification of inventory counted by the management. That could be a visual evidence, right? Apart from that, we may have something like oral evidence. For example, discussion with the management and the officers of the client, etc. This could be type of oral evidence. Second type of evidence is depending on the source. Now, depending on the source, it could be either internal evidence or it could be external evidence. So internal means something which originates from within the organization. For example, a sale invoice. A sale invoice is something which is generated by the management. A credit note issued, an inspection note, receipts of cash. Cash has been received by the management, right? Debit notes, credit notes. These are all internal documents generated by the management, and this forms a part of your internal evidence. External evidence could be something which is being obtained from outside the organization. For example, a purchase invoice. Now, a purchase invoice is issued by a vendor, a supplier. So that forms a part of your external evidence. You can have a supplier's challan, a debit, a forwarding note. Uh, there are a lot of other items which normally comes to the organization from the external. So that forms part of your external evidence. Now, if we talk about reliability, obviously, external evidence is considered to be more reliable than internal evidence. External evidence is always, it carries a higher degree of reliability as compared to internal evidence. So that was a brief understanding of what is the meaning of audit evidence. And audit evidence is primarily cumulative in nature. It's not that you get the evidence on day one of your audit. It keeps on accumulating. So day one, you get some evidence, day two, some other additional evidence, day three, some more evidence. And so though this keeps on accumulating and it is cumulative in nature, There could be some information from other sources as well. For example, your previous audit reports. You're going through some when you are going for the audit of 2024-25, and if you refer the audit of 2023-24, you may come across certain points, certain information which may be useful for the current year audit. So that previous audit report could be another mechanism of obtaining an audit evidence. Quality control policies of the audit firm. Now, whatever policies the practice unit, the firm adopts for doing a particular audit, for example, client acceptance and continuation. So, for example, in our firm, like we have a system of taking up a client acceptance and continuation sheet, right? Before we start the audit, we fill up the client acceptance form, like what are the different parameters, what are the risk elements, and whether we should continue with the client or not, what additional information we obtain about the client. So all these depends on the quality control policies of the firm, and accounting records, of course, yes, as well as internal and external sources. Please note, absence of information is also sometimes used as an audit evidence. So you wanted certain information from the management, you were unable to obtain that information, and that information was not provided to you, or say the information is not available. So non-availability of information or absence of information, that also serves as an audit evidence. So you have to give a disclaimer or maybe an adverse report or a qualified opinion. I'm not going into SA 705 series, but then if you are not able to obtain a particular evidence, particular information, that could also be a type of your audit evidence. Right. Yes. In during the entire course of audit evidence, we have to design and perform procedures which are appropriate in the circumstances for obtaining sufficient and appropriate audit evidence to form our audit opinion based on our own professional judgment and professional skepticism. Uh, we now move to the second subject, which is sufficiency and appropriateness of audit evidence. Now, whatever evidence I collect, whether it is sufficient and whether it is appropriate. Now, if I say sufficiency refers to the quantity of evidence. Quantity means whatever volume of evidence I have obtained, whether it is commensurate with the amount, with the type of risk I am carrying, with the type of complexity of the organization, with the type of risk of material misstatement in the audit. Quantity of evidence is affected by auditor's assessment. Now, if as an auditor I assess the risk to be materially high, I would believe that my quantity of audit evidence would needs to be reasonably high. If I presume that the risk of material misstatement is low, then maybe my quantity of audit evidence would be on a lower side, right? Similarly, uh, is about the quality. For a higher complex audit, I may require a very higher quality audit evidence. So higher is the quality. So the if you are doing a very high quality audit, your audit evidence may also be required to be of that nature. If you are doing an audit with a very low risk of material misstatement, your quantity and quality of evidence may be on the lower side. Now, but please note that obtaining more evidence does not substitute, does not compensate for the quality. It does not mean that if I obtain too much of evidence, it will supplement or it will substitute for the quality of the evidence. So quality and quantity has to go hand in hand. Now, there are certain factors which affect the sufficiency of the audit evidence, and it depends on the auditor's judgment that how much evidence should be sufficient as considered appropriate by the auditor. The first item is materiality. If the auditor feels that the assertions which the management has done are more material to the users, more evidence would be required. If the assertions are less material to the users, so for example, if I am if I am verifying a particular item in my financial statement which is of very little importance or which is of very less materiality, then I may require less evidence for that purpose. But again, having said this, if I am verifying an item in the financial statement which is of high materiality, then I may require a higher quantity of audit evidence. The second factor which affects the sufficiency is the risk of material misstatement. So less evidence would be required in case there is a lesser risk of material misstatement, and more evidence would be required in case there is a higher risk of material misstatement. Third factor, I would say, which would affect the sufficiency of evidence is the size of the population. So normally would say that less evidence would be required in case of a smaller, more homogeneous population. But on the other hand, in case of larger and heterogeneous population, more evidence will be required. So it can be there's a direct relation. There's a directly proportional relation between the size of the population as well as the sufficiency of the audit evidence required. Now, the second term which you see here is the appropriateness of audit evidence. Now, appropriateness means it is a measure of the quality of audit evidence. That is, why it's the relevant and the reliability in providing support to the conclusions on the basis of which the audit opinion is formed. So reliability is influenced by its source and by its nature, and is dependent on the individual circumstances under which it is obtained. So now, if I am obtaining an evidence from a source which is internal to the organization, say for example, versus I am obtaining an evidence from a source which is external to the organization. Obviously, the source which is external to the organization will be more reliable as compared to the source which is internal to the organization. So your appropriateness is the measure of reliability, and it also depends on different factors. Uh, now, yeah. What are the different methods of obtaining audit evidence? If you see the entire gamut, you will see that there are 7 different methods of obtaining audit evidence. Starts from inspection, observation, confirmations, external confirmations, recalculations, reperformance, analytical procedures, and inquiry. So inquiry alone does not provide only sufficient and appropriate audit evidence. It has to be a combination of the 7 different factors which we are going to discuss one by one. 7 different methods, I would say rather. So the first one is inspection. How do you obtain audit evidence with the help of inspection? So inspection means examination of the records or documents, whether internal or external, maybe in paper form, maybe in electronic form, or any other media, or a physical examination of an asset. Inspection provides audit evidence with different types of reliability depending on its nature and source. Uh, some documents provide direct audit evidence. For example, existence of an asset, or a document constituting a financial instrument like a bond. So for example, if I have a bond and if I get a document that okay, the bond exists, if I verify the document of the bond issued by the company or the bond issued by some other organization, then that document, inspecting the document would confirm the existence of the bond. For example, number one. Intangible assets, like inspection of intangible assets may provide about it may provide a reliable audit evidence about their existence, but not about the rights and obligations attached to those assets. So inspection of individual inventory items, for example, if I go for verification of physical verification of inventory, I can always observe. I can always observe and inspect the inventory items. So basically, there'll be 2 types of processes involved. My second method is observation. Now, observation means looking at a process or procedures being performed by the others. And most typically, we come across this observation in case of inventory verification. So, for example, I am the statutory auditor of a company. If I'll go for the physical verification of inventory being conducted by the management, maybe before 31st March, on 31st March, or say after a cutoff date, then I'll be physically present. I may not be doing the verification on my own. It may be done by the team of the management, but my presence in that physical verification of inventory will constitute my observation. I'll observe the method adopted by the management, how they are doing the physical verification of inventory, A, the point in time in which the inventory verification is being done, and the supervision of the management, right? So basically, observation primarily includes observing the procedure adopted by the management in obtaining a particular audit evidence. Third one is recalculation and reperformance. Recalculation means checking the mathematical accuracy of the documents and the records. It may be done manually or electronically. For example, like the client has submitted me a calculation of deferred tax, or the client has submitted me a calculation of depreciation. So I will recalculate the depreciation on my own and see whether the calculation as submitted by the client versus the calculation done by the auditor independently matches or not. Same is with, for example, deferred tax. So it may be in case of amortization, calculation of tax provisions. So these are all examples of recalculation. Re-performance involves auditors' independent execution of procedures and controls that were originally performed as an entity's internal control. For example, the client has prepared a bank reconciliation statement, and the client has given me the BRS, balance reconciliation certificate, bank reconciliation certificate on 31st March. I can verify the bank reconciliation on my own, do a re-performance of the same exercise, or maybe like aging of trade receivables or aging of trade payables, which is being done by the client. I can review that aging on test basis. I may do a couple of aging on my own, and then arrive at a conclusion that okay, the evidence which has been collected by me is proper. Analytical procedures consist of evaluation of financial information and made by some study of plausible relation among both financial and non-financial data, making a study of relationship among both financial and non-financial data, ratio analysis, for example, trend analysis. This could be some of the couple of examples of analytical procedures. I'm not going into the SA 300 series where we study analytical procedures, but yes, just to give an idea, it primarily involves the study of both financial and non-financial, relationship between both financial and non-financial data. So next is inquiry. Inquiry means consists of seeking information of knowledgeable persons. See, please note it is about knowledgeable persons. So if you go to a clerk and obtain certain information from the clerk which who may not be competent, so that does not constitute a valid inquiry. So inquiry should always be done with seeking information of knowledgeable persons in the organization, maybe for both financial as well as non-financial data. It may be oral, it may be written, it may be the evaluation of responses to inquiries which the auditor poses to the management, and always insist on obtaining written representation from the management or those charged with governance to confirm the responses to the inquiry. For example, if I raise a query and the management confirms me orally, always insist for a written representation from the management. Right? So I'll just quickly go to one more. We've done all the 7 procedures. Now coming to obtaining further audit evidence. So I perform inquiry, recalculation, reperformance, observation, inspection, analytical procedures. All these done, said and done. Now, what are the other methods through which the auditor can obtain further audit evidence? Now, further audit evidence can be obtained by performing a some risk assessment procedures and further audit procedures like test of control, substantive procedures, test of details, substantive analytical procedures, etc. Uh, Risk assessment procedures are performed to obtain an understanding of the entity and the environment in which the entity operates, including its internal control, uh, to identify and assess the risk of material misstatement, whether due to fraud or error at the financial statement and assertion level. Further audit procedures could be audit procedures designed to detect material misstatements. It may include test of details or substantive analytical procedures. And while doing this, the auditor is concerned with a number of assertions. Now, one important thing is to note here is the nature and timing of audit procedures. See, this nature and timing of audit procedures is affected by a variety of factors. First being the availability of audit evidence in electronic form only. For example, I go to an audit and I collect some audit evidence, but the evidence is available in electronic form only. It may not be retrievable. It may be a one-time evidence only. So the auditors have to be very careful when they are handling an evidence in electronic form. A, availability of evidence at certain periods or points of time. For examples, certain purchased orders or invoices may exist only at a particular point of time in the system of the client, or the entity is using e-commerce application, so you have download once only option, or it may be discarded. The original invoice has been discarded after obtaining a scanned image. So the auditor has to be very, very careful when the auditor is handling this kind of audit evidence. Certain audit evidence may not be retrievable after a particular period of time. For example, if files are changed or say the backup files do not exist, then the retrievability of information becomes a question mark. Uh, the auditor may also need to study the retention policy, the data retention policy of the management and the client, and to request retention of some information till the statutory record retention period is over. So nature and timing of audit procedure is definitely affected by varieties of factors. Uh, Relevance and reliability. So we discussed about sufficiency. Now we discuss about appropriateness. Two important concepts. The first being relevance, and this is reliability. The quality of all evidence, whatever we collect, is affected by the relevance and reliability of the information on which it is based. Relevance means the logical connection or the bearing upon the purpose of the audit procedures and the assertions under consideration. So, a given set of audit procedures may provide audit evidence which is relevant for certain assertions, but not for others. For example, inspection of documents. So, I'm during the course of my audit, I'm inspecting certain documents. So, inspection of documents related to trade receivables after the period end may provide audit evidence about their existence and their valuation, but not necessarily about their cutoff, right? So one has to be very careful that whatever evidence we are collecting as an auditors, how relevant it is for the purpose of our expressing an audit opinion. When I go to reliability, reliability is influenced by its own source and its nature and the circumstances under which it is being obtained, including the controls on its preparation and the maintenance wherever relevant. So again, if reliability, as I mentioned in the beginning of my deliberation, reliability is always increased if it is obtained from, if the evidence is obtained from an independent third party source, independent external source, not third party, independent external source outside the entity. So that is considered to be more reliable. It is generated if the evidence is collected internally from the organization, it is increased. So the reliability of an internal source will increase, internal evidence will increase if the related internal controls on that particular item are operating effectively, right? So if I am relying on an evidence which is internally generated by the organization, then I have to see whether the internal controls on that particular item of financial statements are operating effectively. Audit evidence obtained directly by the auditor is always considered to be appropriate than audit evidence which is obtained indirectly or through some inference. So, for example, external confirmation, we talk balance confirmation from trade receivables or trade payables. Always follow a system of obtaining a direct confirmation from the trade payables or the trade receivables. Insist on obtaining a bank confirmation directly from the bank wherever the bank balance confirmation is concerned. Audit evidence in documentary form, whether it is paper or electronic or other medium, is always reliable as compared to audit evidence obtained orally. Uh, Audit evidence obtained by original documents is more reliable than evidence obtained by, say, photocopies or Xerox or scans or documents which has been digitized. So given a choice, if I am to study a contract, for example, I go for an audit and I have to study a contract, I would always insist for a hard copy of the contract, study it, take the soft copy as an evidence, maybe a scanned image, and then form my opinion rather than directly studying the scanned image, because that is considered to be more appropriate, right? More reliable. So if whenever we get a chance, always try to make a point to first go for the original copy of the evidence. Then as a part of your documentation, you can collect the scanned image. And this is already which we have discussed, that more reliable versus less reliable. Yeah, correct. Now, selecting certain items for testing to obtain audit evidence. When we are designing test of control and test of details, we have to determine the means for selecting the items which are effective in meeting the purpose of procedures. For example, I may go for selecting 100% items, that is complete enumeration. I may go for selecting specific items, or I may go for audit sampling. So application of any single method or a combination of any of these three may be appropriate depending on the auditor's judgment to obtain audit evidence. Now, for example, if I want to go for selecting all items, so auditor may decide to think that it will be appropriate to examine the entire population that make up a class of transactions or account balance. 100% examination is most unlikely in case of test of control, but it is most common in case of test of details. 100% examination of all the items may be possible if my population size is very small, consists of a small number of large value items. So, for example, if I'm going for the verification of receipts from sale of say aircrafts or say high-end vehicles, so there'll be small number of large value items. There I can think of going for 100% verification. 100% verification is also preferable when there is a significant risk and other means do not provide sufficient and appropriate audit evidence. Or maybe there is a repetitive nature of calculations or other processes performed automatically makes 100% examination cost effective, right? So 100% is suitable in certain specific conditions. Now, selecting specific items. Auditor may decide to select certain specific items from a population. In this method, when the auditor decides to select specific items, he has to consider certain factors like his understanding of the entity, the risk of material misstatement, and the characteristics of the population being tested, right? So, specific items selected may include when we have high value or key items. Say, for example, uh, items which are suspicious, unusual, risk prone, or which have a history of error. So, those items may be specifically selected. All items above a particular amount. So, for example, we go for a bank audit, say, for example, and the bank branch has got a huge number of advances, and we as auditors do our workings and calculate that okay, we'll find check all the advances which are above a particular threshold amount, maybe 10 lakhs, maybe 15 lakhs, maybe 20 lakhs, depending on the size of the advances. Uh, Sometimes the auditor may specify to examine selected items in order to collect certain information depending on the nature of transaction. My third method is audit sampling. Now, sampling itself is a big subject, so I'll not talk much about it here. Sampling is designed to enable conclusions to be drawn about an entire population on the basis of a sample selected from it. Right. So selecting items for testing and audit evidence may be on any of these uh, parameters. 100%, say for example, significant risks, repetitive nature of calculation. There's a comparison to display. And specific items when there is a high value, all items above certain amount, and items to obtain information. Of course, depending on the auditor's understanding of the entity, risk of material misstatement, and the characteristics of population being tested. Sampling, as I told you, we have another standard SA 530 in the same series, 500, 501, and then we have in the same series we have 530, which talks about audit sampling as and when the board takes up another webinar on audit sampling, there we can discuss that what are the different parameters on the basis of which sampling has to be resorted. Now, as an auditor, you come across a situation when there is an inconsistency or doubt with regards to reliability of audit evidence. What should the auditor do when there is an inconsistency or doubts with respect to the reliability of the evidence obtained? If the audit evidence obtained from one source is inconsistent with that from another source, so I obtain evidence from two sources and I found that both the sources are giving me inconsistent audit evidence. Or as an auditor, on applying my professional judgment and skepticism, I feel that there is a doubt over reliability of information. The auditor has to determine modifications or additions, suitable additions, or maybe some additional procedures to be obtained, to be performed, considering their effect on other aspect of audit and enhancing the population of his audit documentation as per SA 230. So auditor has to determine that whether he need to change the audit procedures, A, or B, he may have to apply some additional procedures, or what would be the effect on the other aspects of audit, and accordingly auditor has to change the audit documentation. All right, so we now move to the second part of this particular standard audit evidence SA 500, which is using the work of a management expert. Now, first we need to understand that, and of course, after this, we'll also take up certain, I propose to take up certain case studies on management expert, citing some examples which we have come across during the course of, our journey in the course of different audits. some challenges which we face as auditors. So first, let us understand what is the meaning of management expert. Management expert is an individual or organization possessing expertise in a field other than accounting or auditing, whose work in that field is used by the entity to assist the entity in preparing the financial statements. Uh, for example, actuaries, AS15, if you say employee benefit expenses. Now, when we talk about AS15, and the management relies much on the actuarial valuation report, which is being prepared by an actuary who is an expert in that field, right? And when management takes the services of an actuary to prepare an actuarial valuation report, it is a classic example of using the work of a management expert, right? There could be services of a chartered engineer for doing the valuation of a particular item of property, plant, and equipment, for determining the useful life of a particular asset. So these are all examples of management expert where the expert is being deployed by the management in arriving at a particular assertion. Now, when audit evidence are prepared by using the work of a management expert, for example, we go for an audit and we verify the employee benefit expenses, we verify the compliance with AS15, and we come across an actuarial valuation report. Now, in many cases, it is observed that the auditor simply would rely on the report prepared by the actuary. The auditor would say that, okay, I am not an actuarial expert. I don't have knowledge in that particular subject. I am not a technical expert, so I have to rely on the report which is being prepared by a technical expert. Fine, fine. But as an auditor, what is my responsibility? When I'm using the information as audit evidence which has been prepared by a management expert, I should first see the CCO, evaluate the competence, capability, and objectivity of the expert. CCO, you see it. First, evaluate whether the management expert is competent enough to give that report or that document. What are the capability and what is the objectivity of the expert? We have to understand, we have to obtain an understanding of his work, evaluate the appropriateness of his work. Now, now you cannot go and take an interview from the management expert. Okay, what is your qualification, or what are the how much effort you have put in doing this particular activity. But then we can always see the background check of the expert, like what are the different types of publications he has prepared. Maybe he has written a book. Maybe he's a person of a good image, good reputation, good competence, an expert in that particular area, right? So we need to have an understanding of the work done by the expert, assumptions which he has taken, and whether his assumptions are appropriate to be used as an audit evidence for the purpose of our audit. So that background study, or that uh, what you call the social engineering kind of thing, should be done when you are evaluating the work for management expert. Competence, of course, relates to the nature and level of expertise. Capability, whether he is able to exercise that competence, whether he has that capacity, he has that resources. Objectivity, whether the management expert is influenced by certain bias, conflict, or interest, or influence of others, which may have on the professional or business objectivity of the expert. So sometimes the management expert may be biased towards the management. He may be influenced by the management to issue a clean report, or prepare a clean document. So as auditor, we need to evaluate the competence, capability, and objectivity when we are using the work of a management expert. Yes, as I told you, personal experience with the management expert, your previous experience with the same expert, your discussions with that expert, discussions with others who are familiar with the expert, his qualifications, whether he's a member of a professional body or an association, he has a valid license to practice or other forms of external recognition, how many published papers or books has been written by that expert. And if required, we can also deploy our own expert. So for example, we may hire somebody, we may associate with somebody to verify the work done by an expert of the management. So it would be like something like, and management's expert work is being verified by an auditor's expert, right? So it's quite possible, if considering the complexity, considering the size, considering the risk of material misstatement, auditor may be also required to deploy an expert to verify the work done by a management expert. That's the whole objective of this discussion. We may use the services of expert, as I told you, and the nature and of internal and external data or information which the expert uses. Now, if you are satisfied with the work of a management expert, please also try to see that what is the source of information which is being used by the management expert. So, for example, there is an actuarial valuation being done by a management expert. He is an actuary, and the source or the information or the inputs given to the management expert are itself not reliable. So auditor also needs to ascertain that whether the information, the sources of data is reliable or not, whether the assumptions and the methods which are used by the management expert have their general acceptability within that field, and whether they are appropriate for my financial reporting purpose, whether the applicable professional and other standards or regulations or guidelines have been followed by the expert or not. So all this background check of the expert needs to be done when we are relying on the data of a management expert. So at this point, let us go to some case studies. This is the first case study. So for the benefit of the users, let me read out this case study, and then maybe the participants can respond in the chat box. And I'll also try to see that what could be the possible solution to this particular case study. Okay, so the case study goes like this. We'll have two case studies. The first case study is Aditi is a CA student. She is a part of an engagement team which is conducting the audit of a company called TipTop Private Limited. Now, according to the audit program, she is responsible for verifying the purchases and the property, plant, and equipment as appearing in the books of accounts from the records and bills of the company. She has also been entrusted the responsibility to obtain written representation from the management regarding carrying out of physical verification of inventories during the year. Now, during the course of the audit, she finds A, there is one particular purchase bill amounting to rupees 5 lakhs, which is pertaining to Tip Top Industries, which has been entered in the books of Tip Top Private Limited. So basically, there are two companies. Bill pertaining to Tip Top Industries has been entered in the books of Tip Top Private Limited. That's error, right? Two, the management has refused to provide a written representation relating to physical verification of inventories during the year. She has brought this to the knowledge of the engagement partner, who has decided to use the lack of such a representation as audit evidence. Now, as I told in the beginning, not able to obtain evidence is also an evidence, right? Lack of evidence is also an evidence. Now, discuss whether each of the above constitutes audit evidence and give reasons for your answer. Now, this is a typical scenario which anyone can come across during the course of an audit, and it's quite possible that this kind of this kind of things may happen to any of the junior team member or maybe a middle level manager of the team. Now, as an auditor, what would be my responsibility? I'll straightway go to the answer. Audit evidence comprises both information which supports and corroborates management's assertions, and any information which contradicts such assertions. For example, this purchase bill of 5 lakh, which is pertaining to Tip Top Industries, has been entered in the books of Tip Top Private Limited, right? So it is a contradictory management assertion relating to occurrence of such purchase. So management has booked this purchase in their books, but in reality, this bill pertains to Tip Top Industries, which is a different company. Hence, this is an audit evidence. So Aditi can very well go back and inform this, report this to the engagement partner that this is an evidence which is contradicting the management assertions relating to purchases. That's number one. The second example, not able to obtain information, the absence of information. For example, management's refusal to provide a requested representation. So there was a representation requested for physical verification of inventory, which was denied by the management. This is used by the auditor, and therefore also it constitutes an audit evidence. As I mentioned, absence of information is also an audit evidence. So in this case, management has refused to provide a written representation related to physical verification of inventories during the year. So absence of such information can be used by the auditor, and it also constitutes an audit evidence when the auditor is modifying his opinion as per SA 705. Right? So not able to obtain evidence could also be an evidence, and this is a classical example. We'll now move to one more case study on this particular aspect. That's case study number 2. Let's quickly have a look at this case study. In the course of audit of Hi-Fi Limited, That's an imaginary name, of course. For the financial year ended 31st March 2025, you have observed as an auditor that the company has provided a sum of rupees 80 lakhs in the books of account as gratuity payable to employees based on certificate obtained from an actuary. Uh, give your comments with reference to the standards on audit. Now, the assumption here is that the company has provided 80 lakhs in the books of account as gratuity payable only on the basis of a certificate from actuary. And actuary, of course, I understand is a management expert. Management is not competent or capable to do this calculation, and so they have relied on the certificate obtained from an actuary. So this case study particularly pertains to the use of management expert. As auditor, give your comments with reference to the standard on audit, that is basically SF 500. All right, so we'll move to this answer to this particular case study. So in this case, what has happened, Hi-Fi Limited has provided a sum of 80 lakhs in the books of account as gratuity payable on the basis of certificate obtained from actuary. This liability of gratuity payable to the employees, it will arise at the time of cessation of service. It should be ascertained and provided when the employees are in service. It is an ascertained present liability accruing over the period of service but payable upon cessation of service. So basically, it's a liability which will be payable when the service ends, but it is determinable today. Now, as an auditor, what should be my responsibility? The auditor should check the quantification of the gratuity liability. I should need the calculations that on what basis this 80 lakh has been derived. He should ascertain whether the same has been actuarially determined. Actuarially means it has been applied, it has been determined using the provisions, using the methods prescribed in the actuarial sciences. The auditor should treat the actuary as a management expert. Of course, yes, management has deployed an expert, and he should conduct procedures relevant to checking the opinion of the expert in accordance with SF 500. Now, if I am faced with this kind of situation, and most of us, friends, most of us come across this kind of situation where we simply rely on the certificate given by an actuary, so far as this example of liability of gratuity payable has been booked. We rely on the certificate of actuary, but this is not sufficient. If we are relying on the certificate of actuary, we need to document certain additional procedures, like we need to evaluate the competence, capability, and objective, CCO, of the expert, right? That's number one. We should obtain an understanding of the work of that expert. What are the assumptions he has done? What are the assumptions he has taken? What are the procedures he has applied? Which method he has adopted? Maybe a small write-up as a part of our audit documentation would be handy. We should evaluate the appropriateness of that expert work as audit evidence for the relevant assertion. The assertion is that 80 lakhs has been booked in the books of account as gratuity payable. Now, when doing this entire exercise, we may need to speak to the expert. We need to evaluate our personal experience. We need to obtain the opinion of peers who have worked with that same expert. We may have to deploy our own expert to evaluate the actuary's work. We may need to see the knowledge of the expert's qualification, whether he has published any books or papers, etc. And on the basis of the assurance obtained, on the basis of the assurance derived after evaluating of the capability of the expert, we can form our audit opinion. So that is one precaution which I believe would be handy for any audit we do, and it would help us to improve the quality of the audit work when we are relying on the work of a management expert. So this is the whole gamut of SA 500, SA 500 audit evidence. I believe I was able to cover this entire standard in a precise manner. I would suggest to straightway move to SA 501 now. And post completion of SA 501, we can take up the question answer session, which will be moderated by the team from the Auditing and Assurance Standard Board. So my next standard is SA 501, which is relatively a smaller standard, I would say. The standard is audit evidence, specific considerations for selected items. This SA 501 is again a revised version of the erstwhile Auditing and Assurance Standard AAS 34. I still remember when we were students, it used to be double AS. So when I was student, when I was doing my CA course, CA Foundation, CA Inter, CA Final, then the nomenclature used to be double AS 34, audit evidence, additional consideration for specific items. It was specific there, now it is selected items. That's a change which ICI has brought in. And this was issued in way back in 2005, and the SA double AS 34 was issued in 2005, and in 2010, 1st of April, uh, the new revised standard, that is audit evidence specific consideration for selected items, has been issued by the institute. And there is no change so far as the international standard ISA 501 is concerned. It is exactly the replica of the same international standard. Now, this standard deals with specific considerations by the auditor in obtaining sufficient and appropriate audit evidence in accordance with SF 500 revised and other relevant standards. With respect to three items, the first in inventory, second is litigation and claims, and the third is segment information. I repeat, the first is inventory, the second is litigation and claims, and the third one is segment information. So the whole standard talks about the existence and condition of inventory, the audit procedures, auditor's objective for existence and condition of inventory A, completeness of the litigations and the claims involving the entity, and the presentation and disclosure of segment information in accordance with the applicable financial reporting framework, maybe AS, maybe Ind AS. So, in this entire standard, what we are going to cover, we are going to discuss the scope of the standard. We are going to discuss auditor's objectives, inventory verification, how is sufficient and appropriate audit evidence obtained, what would be the role of auditors in attendance at physical inventory counting, some important aspects, the procedural aspect of attendance as physical inventory counsel, that will also discuss, evaluating the instructions given by the management. We'll also examine the observing performance of management count procedures. What are the benefits of inspection of inventory? How to perform test counts? What happens in particular scenarios when physical inventory counting is after the date of financial statements, or maybe sometimes it is before the date of financial statements? What are the additional procedures to be performed? We'll also discuss inventory under the control and custody of third party if it is material to financial statements, litigation and claims, and of course, the third being the presentation and disclosure of segment information. For the benefit of users, let me inform that the Institute of Chartered Accountants of India, under the Auditing and Assurance Standard Board, have published an implementation guide to this particular standard SA 501, which is available for free download on the portal of the institute. I would strongly recommend the users, because when I was preparing this presentation and when going through the entire implementation guide, I found there are a lot of templates which has been prescribed by the institute for the guidance of its members. Very handy, very useful, and beautiful, well designed, well researched templates, I would say. And my compliments to the entire board for doing this fantastic and wonderful work of taking out that implementation guide. Although the guide was issued long back, but the guide, as you know, there is no update in the standard, there is no change in the standard, so the guide is still relevant till date. I would strongly urge all the members who are attending this particular session today to please download that implementation guide of SA 501. Very useful. It also prescribes you certain, templates so far as inventory audit is concerned, litigation and claims is concerned, and segment information is concerned. So once again, implementation guide as being published by the institute on number of occasions on different topics. Now, so that is the scope of this standard: inventory, litigation, and segment information. Now, when I come to inventory, I am mostly concerned with the existence and the condition of the inventory, like whether my inventory, in what condition it is existing, and whether it actually exists or not, or it is merely on papers. B, coming to litigation and claims, I need to ascertain the completeness. There may be a situation, and this is something which we keep on receiving queries from members, that whether the client has disclosed all the possible litigation and claims to the auditor or not, is something which is there, which has been missed out. How, as an auditor, I ascertain that the complete list of litigation and claims has been shared to me. Third, segment information, whether the presentation and disclosure of segment information is accordance with the applicable financial reporting framework. So the entire gamut of this SA 501 is how the auditor should obtain sufficient and appropriate evidence regarding these three particular items. Now, Item number one is audit procedures for inventory. Right. So when inventory is material to the financial statements, the auditor shall obtain sufficient and appropriate audit evidence regarding the existence and the condition of inventory by A. The auditor should attend the physical inventory counting process. Always ensure that maybe on 31st March, on the cutoff date, or a particular date before or after the balance sheet, the auditor should be present during the physical inventory counting process. It may be impracticable in certain situations. It may be impracticable due to certain restrictions. But the purpose of this standard is to prescribe the procedure for attendance is physical inventory counting to evaluate management's instructions and procedures for recording and controlling the result of physical counting process. What instructions are being given by the management to the physical counting team and how the management is evaluating it, how the auditor is evaluating those instructions. B, observing the performance of management's counting procedures, how management is doing the counting of a particular item of inventory. Auditor can also inspect the inventory, and auditor himself can also perform certain test count. The auditor need to do this to ascertain whether the inventory records accurately reflect the inventory count results as performed by the management or not. Now, coming to this physical presence at physical attendance at physical inventory counting, it involves inspecting. It involves basically inspecting the inventory to ascertain its existence and evaluate its condition and performing test counts. Observing compliance with management's instructions and performance of procedures, obtaining evidence of the reliability of management's instructions. Now, there may be a situation that management is normally entrusted with counting of inventory at least once in a year to form a basis for financial statements and to ascertain the reliability of perpetual inventory system wherever applicable. Now, there are certain matters which are relevant in planning the attendance and physical inventory counting. The auditor has to ascertain the nature of inventory. What type of inventory am I going to supervise? What are the different stages of completion of WIP? What is the risk of material misstatement related to the inventory? If it is a higher risk of material misstatement related to inventory, I may have to deploy a larger team. What is the nature of internal control related to inventory? When you study inventory process, you'll find that there is a system of gate challan, there is a system of gate entry register, there is a system of receipt of material by the customer. So what type of internal control related to inventory is being followed? If the auditor is satisfied with the internal control related to inventory, he may plan his physical counting processes accordingly. What is auditor's expectation with respect to adequate procedures and proper instructions by management? There may be a situation when management has simply deployed a substandard team to simply go and count the inventory without applying proper scientific methods. What is the timing of physical inventory counting? Is it on 31st March? Is it on 25th March? Or is it on 10th of April? So that auditor has to consider whether the entity maintains a perpetual inventory system or not. That's again may not be applicable for all types of organization. What are the locations at which inventory is held? Also including the materiality of the inventory and the risk of material misstatement at different locations. In deciding at which locations attendance is appropriate, right? The auditor has to consider that what are the locations, and when we'll do a case study on this again. The auditor has to determine that which locations should he visit. So there may be a situation when inventory is kept at multiple locations. It may not be practically possible for the auditor to visit each and every location. Third, whether the assistance of auditors expert is needed. Now this is a pertinent point. Let me tell you an example. There was a case when there is a clinic which is being operated by the government, state government. The clinic is in a boat, because there are certain states which are flood prone. Flood occurs in certain states, so the government deploys a clinic in a boat. And the government wanted to evaluate the operating effectiveness of those boat clinics. Now, when the government decided to evaluate the operating effectiveness of those boat clinics. Now, these boat clinics has a small mini pharmacy, not pharmacy, I would say, but a stock of inventory of medicines. Now, suppose the boat reaches a particular village which is affected by flood, provides medical assistance, consumes certain medicines, consumes certain drugs, etc., which are being carried in the boat. The auditor was told to evaluate the operating effectiveness. Now, as an auditor, a person from a finance background, I may not be conversant that how much is the dosage prescribed for a particular type of medicine to a particular disease. And on verifying the records of the medicine consumption, I see that a lot of medicine has been consumed, but I am not sure whether the appropriate amount of dosage was consumed, or it was on a higher side or on a lower side. What we did as auditors, and this is something which I have come across, is that we also took a doctor along with in our team when we were doing the evaluation of operating effectiveness. The doctor guided us that, okay, for this particular disease, this is the standard consumption. For this particular item of disease, this is the consumption. And accordingly, with the help of an auditor's expert, I would say. So, an auditor using the help of a doctor to evaluate the operating effectiveness of a clinic. So, that was being done. So, the auditor also need to ascertain whether the assistance of an auditor's expert is required or not. Now, of course, procedural aspect, it would include inspecting, counting, inspecting of inventory, like we have to ascertain the existence and evaluate the conditions and perform certain test count. When I say existence, to see whether inventory actually exists or not, or you may go to a godown which consists of cartons, for example. So if it's an FMCG company, the company is dealing in FMCG goods. You are appointed as auditor. You go for the inspection of inventory, and you find that there are cartons being kept in the warehouse, and maybe there is a possibility that certain cartons are empty, right? So as an auditor, you need to inspect on a test basis. You have to perform test counts and ascertain whether the inventory actually exists or not. There may be a situation when the inventory is not kept in a proper usable condition. You may have to write down the inventory to its realizable value, because the condition of the inventory may not be appropriate as per the market norms. Observing will include compliance with management instructions. What instructions has been given by the management to the team which has gone for the inventory verification process? The performance of procedures for recording and controlling the results of physical inventory counting. Whether the team is adjusting the differences observed during inventory verification process or not. Obtaining audit evidence as to the reliability of management's count process. You need to prepare a document regarding what procedures has been adopted by the management in counting the inventory, maybe obtaining certain photographs. So these different types of procedural aspect are to be performed by the auditor when he is attending the physical inventory counting process. Evaluation of management instructions would involve application of appropriate control activities and accurate identification of stages of completion of WIP. So WIP is an important element of inventory. Now, when you are evaluating, when you are attending the physical count of inventory, whether proper completion of WIP has been calculated or not. Maybe the WIP is not, the correct calculation of WIP is not getting reflected in inventory records. What is the treatment being followed by the company in slow moving items? Whether the management is doing a lot of stocking of slow moving items, how the management is handling the slow moving item, what provisions the management has taken in their books for slow moving items. See, inventory control does not always means physical counting of inventory. It also involves the evaluation of the qualitative aspect of that inventory being lying in the disposal of the management. What is the treatment being done by the management for obsolete and damaged items? So when you go for inventory counting, you may come across certain items which are obsolete, which are damaged. So what procedure the management has adopted, what policy the management has adopted for handling those obsolete and damaged items? What policies and procedures the management has adopted for items owned by third party? We'll have a separate small slide on this. Items owned by third party. And this you will commonly find in job work cases where items are sent on job work basis to different, to different owners. procedures to estimate the physical quantities if any kind of estimation is involved, and control over the movement of inventory before and after cutoff. So you go to the management's place for inventory verification, say on 10th of April. So your balance sheet is of 31st March, but the inventory verification is being done on 10th of April. So what is the control over movement of inventory before and after the cutoff date? So that needs to be considered by the auditor when he is evaluating management instructions. Uh, yes, benefits of inspection of inventory, it will help the auditor in ascertaining the existence, but not necessarily its ownership. So I may be able to verify that inventory exists, but it may be an inventory belonging to a third party lying in my warehouse, right? That cannot be checked apparently. Identifying obsolete, damaged, and aging inventory, that's something which we already discussed. Auditor can do test counts, etc., etc. All right. Now, physical inventory counting after the date of uh, financial statement. So there may be a situation when inventory counting is conducted at a date other than the balance sheet date. So what could be the audit procedures and what could be the auditor's responsibility? So if physical inventory counting is conducted at a date other than the date of the financial statement, the auditor should, in addition to the procedures which we have discussed so far, he should perform audit procedures to obtain audit evidence about whether the changes in inventory between the counting date and the date of financial statement is properly recorded. So, for example, I go for inventory verification on 10th of April. I need to do a proper reconciliation of the inventory movement between 1st of April to 10th of April. So, once I do a reconciliation of the inventory movement between 1st of April to 10th of April, I can always come back and derive to my inventory value of 31st of March. Uh, we need to see whether perpetual inventory records are being appropriately adjusted, the reliability of the records being maintained by the entity, and the reason for significant differences between the information obtained during the physical count and the inventory records of the company. So these things needs to be considered when we are doing inventory verification at a date which is other than the date of financial statement. Now, there could be a second situation when the auditor is unable to attend physical count of inventory. What happens when the auditor is unable to attend physical count of inventory? If the auditor is unable to attend physical count of inventory due to unforeseen circumstances, he shall make or observe some physical count on an alternative date and perform some audit procedures on the intervening transactions. So if I am not able to do the inventory on 31st March, or maybe it is impracticable for me to go on a particular date, I should do it on some alternative date and perform my procedures on the intervening transactions. What happens when the performance of inventory verification is impracticable for the end of the auditor? If the auditor is unable, or if it is impracticable for the auditor to attend inventory verification, then the auditor should perform alternative audit procedures to obtain sufficient and appropriate audit evidence regarding the existence and condition of inventory. Now, alternative audit procedures could be the inspection of documentation of the subsequent sales of a specific item of an inventory which is acquired or purchased prior to the physical inventory process, right? Prior to the date of physical inventory. And if it is not possible for the auditor to do so, he should suitably modify his audit opinion as per SS 705. Now, there may be a situation when inventory is under the control of third party. Yeah. Inventory is under the control of third party. What happens when inventory is under the custody and control of a third party? Where there may be a situation when inventory is under the custody and control of a third party, and that inventory amount is material to the financial statements. The auditor should obtain sufficient and appropriate audit evidence regarding the existence and condition of the inventory which is lying at the disposal of third party. Uh, how? He can request confirmation from the third party as to the quantity as well as condition of inventory held on behalf of the entity. A. He may perform some other audit procedures which we are going to discuss, which are appropriate in the circumstances. Other audit procedures may include like verification of the warehousing receipt which are available with the third parties, requesting the third parties to give a confirmation whether the inventory has been pledged as collateral, attending or arranging another auditor to attend. Now, there may be a situation when we may request another auditor, we may request the management or to arrange for another auditor to attend the inventory verification. The third party's physical counting, if practicably possible. Obtaining another auditor's report on the adequacy of third parties' internal control for ensuring the inventory at third parties' warehouse is properly counted and adequately safeguarded. So, if you have inventory with third parties on job work basis, these additional procedures may be performed. Uh, this is what we have been discussing about. Now, coming to a small case study, and we'll have two case studies on this. And I believe that this case study would be really handy for the participants today in understanding the implication of this particular aspect of inventory. So the first case study is like Big Biz Limited supplies Navy uniforms across the country. The company has 4 warehouses at different locations throughout India and 5 warehouses at the border area. Border means the borders of the country. The major stocks are generally supplied from the border area. Now, Big Biz Limited appointed Mrs. ABC and Company to conduct its audit for the financial year 24-25. Mr. A, who is a partner of ABC and Company, attended all the physical inventory counting conducted throughout India, but he could not attend the same at borders due to some unavoidable reason. You are required to advise ABC and Company about how sufficient and appropriate audit evidence regarding the existence and condition of inventory be obtained. So this is a case where inventory is lying at different locations. Major portion is lying at border area, and it is being supplied from the warehouses lying at the border area, and the auditor is not able to conduct or participate in the physical counting process on the warehouses which are lying in the border area due to some reasons, some unavoidable reasons. So how, as an auditor, we will obtain sufficient and appropriate audit evidence to justify our audit opinion? I'll straightway move to the answer. So SA 501, audit evidence, specific consideration for selected items. When in case our inventory is material to the financial statements, the auditor should obtain sufficient and appropriate audit evidence. Either he should do physical counting himself, be present at the physical counting, or he should evaluate the management's instructions and procedures for recording the controlling and the result of entities counting process. Through observation, through inspection, to performing test counts, and performing audit procedures over entities' final records to determine whether they actually reflect inventory records results or not. So what the auditor should have done in this case is that he should have requested the management to give him the documents which the management has obtained at the time of doing the physical counting of inventory at their end. He should have evaluated those documents. He should have tried to observe the performance of management's count procedures. And on his own, he should have inspected the inventory and performed certain test counts. Now, this is another case study which is related to inventory verification. For the benefit of the readers on the screen, you are the auditors for Make Life Easy Limited for the year 24-25. The inventory at the end of the year on 31st March 25 was rupees 5.25 crores. Due to unavoidable circumstances, you could not be present at the time of annual inventory verification. Again, the similar kind of case study, that how would the auditor ensure that the physical verification conducted by the management was in order. So again, SA 500 talks about 501 talks about audit evidence, specific consideration for inventories. If the auditor is not able to be present at the physical counting on the date which is planned due to unforeseen circumstances, he should take or observe some physical counting on an alternative date, and wherever necessary, perform alternate audit procedures to assess whether changes in inventory between the date of counting and the period and date are correctly recorded. So I would what simply do is that I am going for the physical verification on 10th of April, for example. So I would see the outward movement between 1st April to 10th April. I would see the inward movement between 1st April to 10th April. Do a reverse calculation. Like normally what we do is that opening stock plus purchase minus sales is equal to closing stock. I would do a closing stock plus sales minus purchase is equal to my opening stock. So do a reverse calculation and then derive at the inventory value of 31st March. The auditor should also ensure that appropriate cutoff procedures were followed by the management. Management's written representation should be obtained on the completeness of the information provided. We need to obtain a written representation from the management that whatever information has been provided is proper and complete, and assurance with regards to the adherence of the laid down procedures for inventory counting. So by following these procedures, the auditor can ensure that whatever inventory verification was done was in order. So the first item of this SA 501, which is about inventory verification, specific circumstances, procedures to be performed, and certain case studies, we come to an end. And now we go to the second consideration. Second consideration for selected items is on litigation and claims. So we move to the next item, which is litigation and claims. Now, litigation and claims is a gray area for auditors because you audit on 31st March, you are not aware of certain uh, conditions prevailing as on the date of financial statement, and some information comes to your disposal which may be incomplete. Recently, we got a query from one of the user that how an auditor can ascertain that whatever information is being supplied by the management so far as litigation and claim is uh, complete, about the completeness of the information. So the auditor has to design and perform certain audit procedures in order to identify that litigation and claims involving the entity which may give rise to material misstatement. Like what are those procedures the auditor may perform? A, inquiry with the management, and wherever applicable within the entity, including the in-house legal counsel. So there are a lot of companies where you will find that a lot of organizations, there is an in-house legal counsel. So auditor need to obtain some representations and inquiry from the management as well as their in-house legal counsels. A, auditor needs to review the minutes of meetings of those charged with governance, uh, correspondence between the entity and its external legal counsel. So whatever communication has been done, and in case management is not disclosing that communication, the auditor at best can go and check the legal expenses account in the financial statement. So if you do a profit and loss analysis, just check the legal expenses account. You come across a situation when the huge amount of money has been paid to the counselors, to the lawyers. The auditor can always raise a flag that why these expenses are paid to the legal counsel. What is the purpose of payment of huge amount of legal expenses? Not necessarily on 31st March. It may be a situation when legal expenses are spread across the next financial year. So, for example, you are doing the audit of March 24-25, and I suggest you to review the legal expenses account of financial year 24-25. Please do not restrict your verification to only financial year 24-25. Rather, I would suggest that you should also check the legal expenses account of the financial year 2025-26 till the date of your audit. There may be a situation when the expenses are being paid to the lawyers in the next financial year. And for the year for which we are doing audit, we are not able to form an opinion. We are not able to do an analysis that whether there is any kind of legal claims or litigations being imposed on the management. So when the auditor, if the risk of material misstatement regarding this litigation claims, etc., is identified, the auditor may also consider directly communicating with the external legal counsel of the entity. And I was referring to the implementation guide of SA 501, which is being issued by the Institute of Chartered Accountants. I would suggest that if you go carefully through the guide, you will find that there is a template that in which manner the auditor can communicate to the external legal counsel and obtain his, feedback. First of all, the auditor should do it through a letter of inquiry requesting the external legal counsel of the entity to communicate directly with the auditor. Now, what the auditor is going to ask? The auditor is going to ask that give us a status of the different litigations and claims which are being posed on the entity A. Now, if the laws or regulation prohibits the external legal counsel to directly communicate with the auditor has to perform certain additional audit procedures. Normally, you will find that the external legal counsel may not respond immediately to a letter of inquiry raised by the auditor. uh, in that case, what should the auditor do? Now, for this purpose, the auditor should ask for a list of litigation and claims from the management, the management assessment of the outcome of each such case, each such identified litigation and claims, and its estimated financial implication, including the cost involved, whether any appropriate provision needs to be booked in the books of accounts of the current financial year, a request letter that entity's legal counsel may confirm the reasonableness of the assumptions, the assessments done by the management. So, for example, the management has assumed that the management has assessed that the overall claim which would be required, which would be required to be paid by the company on a particular item of a claim is say 5 crores. So the auditor can always confirm with the external legal counsel about the reasonableness of that claim, whether the 5 crore rupees is reasonable or not, whether we need to increase the amount of provision or whether the provision is on a higher side. The auditor can also go for a confirmation request from the external legal counsel that the list available with us shows a claim of 10 items, whether this is a complete list, whether it is correct or whether it is factually incorrect. So these kind of procedures the auditor can always perform with the external legal counsel. In certain cases, the auditor can also consider meeting in person with the external legal counsel. The auditor may also judge it necessary to meet with the external legal counsel of the entity and discuss the likely outcome of a particular item of litigation or claim. This may be the case for example, where the auditor determines that the matter is of a high significant risk. So the auditor feels that the matter is very risky. He can consider going to the external legal counsel's office and arrange a meeting with them and discuss the outcome, that what could be the possible outcome. Sometimes the matter is very complex. If considering the complexity of the matter, the auditor can again go back to the external legal counsel and discuss about this particular issue. And when there is a disagreement between the management and the external legal counsel, uh, such meeting would require, but such meetings would require the permission of the management, and it is normally held. It is normally to be held in presence of a representative of the management in attendance, right? So the auditor cannot suo moto go to the external legal counsel office and simply meet him, but he should ensure that management's concurrence is being taken before arranging such meeting. Whenever there is a matter of disagreement between the management as well as the external legal counsel, and the representative of the management should also be present in those meetings. Now, the auditor may need to modify his opinion in certain cases as per SA 705. The management refuses to permit the auditor to communicate to the external legal counsel. The auditor wants to meet the external legal counsel, but the management refuses the auditor to give permission to go and meet. So there is a limitation on the auditor's work, and in that case, the auditor is not able to obtain sufficient and appropriate audit evidence. So in that case, the auditor may consider modifying his audit opinion in accordance with SS 705. The reverse may be a situation. Management permits the auditor to meet the external legal counsel, but the external legal counsel refuses to meet the auditor. In that case, also, the auditor may consider a need for modified opinion as per SS 705. There may be a third situation when the auditor is unable to obtain sufficient and appropriate audit evidence by performing alternate audit evidence. Again, the auditor may consider suitably modifying his opinion as per SS 705. But whenever the auditor is taking a course of action for implementing SS 705, the auditor should request management and wherever appropriate to those charged with governance about providing a written representation that all known, actual, or possible litigations and claims whose effect should be considered in preparing the financial statements have been disclosed to the auditor, and they are appropriately accounted for and disclosed according to the applicable financial reporting framework, be it AS or be it Ind AS. So those completeness of the claim can be obtained by the auditor in this manner. Always insist on obtaining a written representation Do not conclude your audit without obtaining a written representation about pending litigation and claims. We have time. We move quickly to the last item of this particular standard, which is on segment information. And after that, I propose to take up a couple of case studies, maybe, and then some question answer session. Segment information is information which refers to information about different types of products and services of an enterprise and its operations in different geographical areas. The auditor need to obtain sufficient and appropriate audit evidence regarding the presentation and disclosure of segment information in accordance with the applicable financial reporting framework. There is a separate requirement in accounting standard framework, and there is a separate requirement in Ind AS framework. Now, the auditor should obtain an understanding the auditor feels he may go for testing the application of such methods. May not be done on a 100% basis, but it may be done on a sample basis. Considering again the risk of material misstatement, the auditor should also consider applying different types of analytical procedures or other procedures which are appropriate in the prevailing circumstances. I'll discuss a couple of examples where this uh, matters which may be relevant for obtaining an understanding of the methods used by the management of segment information. For example, there may be sales, transfers, and charges between segments. So there are multiple segments being operated by the entity, and there are sales and transfers or sharing of charges between segments, or maybe elimination of inter-segment amount. So that is one area where the auditor may consider application of segment information. Comparison with budgets and other expected results. For example, operating profits as a percentage of sales. That again is an area where the auditor can uh, consider whether the methods are likely to result in disclosure according to the applicable financial reporting framework. Allocation of costs and assets among different segments. So, say for example, a big company like ITC has got multiple segments. Now, auditor may consider that whether the allocation of assets and cost has been done appropriately among the different segments of the company or not. There may be a situation when the auditor need to consider the consistency with prior periods and the adequacy of disclosures with respect to inconsistency. So there has to be a consistency in disclosure of segment information, and whenever there is a inconsistency in disclosure of segment information, the auditor may uh, consider that auditor may consider reporting it, applying his test results. So this was about the different types of information which we auditor is supposed to report on segment information. And with this, we almost come to the end of the different considerations for selected items so far as audit evidence is considered as per SA 501. Now, I'll request the participants to engage in a kind of question answer session, and with the permission of the organizers from the auditing and we can take up those queries and questions for discussion.
Yes,
Over
sir.
to you, Vivekji.
Yes, sir. We have received some questions from members. So first of all, sir, I would like to thanks to you for sharing such a valuable insights on SA 500 and 501. And sir, I am pleased to inform you that in today's session, we have joined by more than 800 participants. And we have received some questions from the members. So I request you to please take these questions, and I will read the questions and also put the questions in chat box for your reference.
Yeah.
So first question that is related to sufficiency and appropriateness of audit evidence. Uh,
Yeah.
So, so, mm, mm, just so, the first question is that we are auditing revenue transaction of a client, and the client provide us 100 invoices, but all are related to sales made to a single customer during the last quarter of the year. Although the volume of evidence is large and it does not cover the entire population. So, how would we consider that this is a sufficient or appropriate audit evidence? And what are the additional steps that we should take to make our testing more reliable?
All right. So what I understand in this particular case is that the management has given, say, a reasonable amount of invoices, but again, all the invoices pertain to a single customer. Please
Yes,
note that when we are talking about sufficiency of audit evidence, we have to also see the homogeneousness of the entire population. In this case, uh, all the invoices belong to a single customer, which may not be a correct method of obtaining audit evidence. As a prudent auditor, I would suggest that when we are doing the audit of sales transactions, when we are commenting upon the sufficiency of audit evidence, it has to be a mix of different customers. It should not be on the basis of a single customer, right? Number one. Number two, you also mentioned in the query that the invoices pertain to a period which is towards the end of the fourth quarter, right? The last quarter,
yes,
perhaps.
yes.
So we also need to ensure that the invoices are spread across the entire financial year. May not be through each and every day of the year, may not be through each and every week or month, but yes, it should be evenly spread across the different parts of the year. So some invoices may pertain to quarter one, quarter two, quarter three, quarter four, and so on. Plus, it should be a mix of different customers. Again, considering the risk of material misstatement, you need to identify and determine the materiality level up to which you are going to check the invoices of the sales.
Okay. And so the next question is during the audit of fixed assets, the purchase invoices shows that the machinery was installed in February, but the management claim it was operational since December to claim additional depreciation. So in this case, how do we deal with this conflicting evidence? And which evidence would we rely upon and why?
If it is related to an item of property, plant, and equipment, specifically machinery, I would suggest number one, of course, you'll check the arithmetical accuracy, the financial assertions that machinery was purchased, it belongs to the management. The management is the custodian, the machinery, the date of installation, the certificate from a technical person saying that the machinery was installed on, say, in the month of February. Now, the management claims that the machinery was operating since December. You can also verify that what is the output of the machinery. If the output of the machinery, if there is an output in the inventory of the company which is being generated by that particular machine, whether that output exists in the month of December or not. So suppose there is a machinery which is supposed to produce a particular item of inventory. Go and check whether this particular item of inventory was in production in the month of December to sustain the claim of the management that it was operating in the month of December. For example, if the item of inventory does not exist in the month of December, that means the management's claim is not tenable that the machine was operating since December. We need to check the actual production date. This can be verified with the help of different records maintained in the factory, different records maintained in the unit, that whether this particular item was available on the particular date of operating as claimed by the management.
Okay. Okay. So in the next question, that at the year end, the company has a debtor of rupees 50 lakh and management claim it is a fully recoverable. In April, that is the before audit report date, the auditor or the debtors file for bankruptcy. So in this case, how would we treat this information as a audit evidence?
So this is a very simple and clear-cut case because as on 31st March, the management considered this data, this receivable, to be good. And before the signing of audit report, we come to know that the particular receivable, the particular party has filed for bankruptcy. So obviously, the management assertion is not justified in this case. We can always this itself, the bankruptcy petition filed by the company, the bankruptcy petition filed by the receivable itself is an audit evidence that the trade receivable is not recoverable.
Okay, sir. And so does it affect any disclosure or also the recovery?
Yeah. The disclosure, even if see, the management may not disclose it in the financial statement about its recoverability, but when we go for the classification of the receivable about being the recoverability, whether it is good or bad, that part we can always consider based on this bankruptcy petition filed by the company, and always obtain written representation from the management. This could be a very good audit evidence for you.
So during stock count attendance, we observed that certain high volume items that are stored in a sealed boxes and management refused to open them, citing the reason that it is a safety concern. In this case, how will we handle this limitation in obtaining audit evidence?
So basically, inventory verification process and management is uh, posing a limitation on giving us certain items for our inspection, citing safety concerns. First of all, we need to impress upon the management about the need of this physical verification of inventory and request the management to give access to inspect those items. Still, if the management does not want to, give access to those items, we need to appropriately report this to the those charged with governance, that there is an audit limitation, and if there is no further assurance from those charged with governance, we may consider suitably modifying our opinion as per SA 705. That's the answer of the second one. That what will be the impact on your audit opinion if management continues to deny access? The auditor has no other choice. Considering the risk of material misstatement, we need to suitably modify our opinion as per SA 705.
Sir, in a small entity audit, much of the audit evidence is oral explanation from the management rather than the documented records. So in this case, how will we evaluate whether this evidence is sufficient or not, and in which case would we insist on documentary audit evidence?
Absolutely do not rely on oral evidences. Please go for a written representation from the management. In case there is an evidence which is oral in nature, document it, get it signed by the management, digitize it, whatever. But please insist on a written representation. At the end of the day, written representation is only going to sustain, it is only going to help you in your peer reviews or in your quality reviews. Written representation from the management and preserve it as a part of your audit documentation.
And so the next question is, the inventory is valued at a cost of rupees 1 crore at the year end. And in February, before audit completion, the company sell a significant portion of the same inventory for rupees 90 lakhs. So in this case, how does the subsequent events provide audit evidence regarding valuation of inventory?
I would just like to go to the question once again. Inventory is valued at a cost of 1 crore at year end. In February, before audit completion, the company sells a significant portion of the same inventory for rupees 90
90.
lakhs. So I think there is some mismatch in the question, because we are talking of inventory valuation on 31st March and inventory is sold before.
I think, sir, it should be after 31st
Reverse.
March.
Correct.
I
In my
think
opinion, this question is perhaps erroneously reported here. Inventory should be okay. So if the inventory valuation is being done at 1 crore rupees on 31st March, and say after 31st March, the company sells the inventory at rupees 90 lakhs, this could be an event occurring after balance sheet date, right?
yes.
And if it is a condition which is known to the auditor before the signing of the audit report, I would strongly recommend that the inventory is brought down to its original value of 90 lakhs as on 31st March, because it's always cost or realizable value, whichever is lower.
And sir, it is the last question that while
Yeah.
reviewing the legal expenses, we find a pending case disclosed in the notes of account, and management assert that the outcome is remote, but external legal counsel indicate that there is a possible liability of rupees 5 crore. So
So what's
in
the
this case,
question?
how should we, sir, the question is, while reviewing the legal expenses, we find a pending case disclosed in the notes of accounts, where management assert that the outcome is remote, but external legal counsel indicate that there is a possible liability of rupees 5 crore. So in this case, how should we evaluate this contradictory information?
For contradictory information, first of all, we need to go and meet the legal counsel in person. Because this is the same
Okay.
situation which we have discussed in the second last slide of today's presentation. If there is a contradiction between management's assertion and between the information provided by the legal counsel, the auditor should always try to have a one-to-one meeting with the external legal counsel in presence of the management attendance, as well as after taking the permission from the management. The auditor should first try to see whether there is any resolution possible about this contradictory information. And in case uh, the auditor goes and meet the external legal counsel, he should confirm the reasonableness of the management assessment about this additional liability of 5 crores. And auditor should try to obtain further information from the external legal counsel whether this information is incomplete or incorrect. Still, if there is a still if there is no conclusion obtained between the legal counsel and the management, the auditor may consider suitably modifying his opinion according to SS 705.
Okay. Okay. So thank you, sir, for this session and taking these questions as well. So I also thank you to all the participants for their engagement during the session. So thank you, sir. Thank you all. Thank you,
Thank you so
technical
much.
team.
And I believe the session would be useful for the participants. And thanks to the Auditing and Assurance Standard Board for giving this opportunity to share my experiences and views with the members of ICA. Thank you so much.
Thank you, sir. Yes, yes.